Welcome everyone to this 23rd edition of this financial rubric, which is the weekly market technical analysis. Here is François. I'm very happy to find you again through this this financial rubric that we do every single Monday. Today is essentially the same program as we already saw with we'll turn around the major asset as we used to do as US dollar, euro bond, gold, and USD CAD, because there's something very interesting as I want to show you for technically and also like some pattern that we could like take an advantage for that. So very happy that to find me, to discover, to see me. My name is again François. I'm the main trainer and founder of the Global Street Trader Academie, GSTA, which is financial academy online. There we teach people how to trade stock, indices, option, forex, and bond, also and ETF too, if you're interested to do like strategy on or portfolio management or alternative management. Please feel free to ask about that, and we will definitely keep in touch with you. And if you stay in Canada, also you can send me a message through the Facebook page or messenger. Also you can call me directly with the number of the GSTA, which is 514-943-4416. For others people which is they living out Canada, you can send me definitely a message on contact at gstacademy.com, right? So I'm very happy again to find you. We are starting with this new rubric. I do apologize again for the quality of the noise, because I'm staying around like a construction site, and sometimes we can hear some noise for construction, and it's outside of me. So that's why I apologize in forward if it's impacting the quality of the sound. Okay, so here is the disclaimer. So features, equity, ETF, option, CFD, and others derivative in trading have a great potential reward for sure, but also great risk of losing your capital. So you need to be aware of the risk and be willing to accept them in order to invest in these products. Don't invest the money that you can afford to lose, unfortunately. And this program is neither a solicitation nor an incentive, and also to offer to sell or to buy in financial markets. It's not like in advice or like a recommendation. Okay, so let's start with the weekly market technical analysis for the 23rd, which is starting today, the 22nd to 26th. And as I said in the beginning of this video, is already we see already this major product, because if you like studying trading, you don't need to going to see others, like you don't need to trade as much product. You can selectioning couple of product and to keep on that and focus. Then you can master the progression. You can also understand definitely the fundamental analysis on that. You can also like understand deeply what's happened on those markets, because you used to trade that, right? So that's why from like the needs of this program, I just take a couple of like one of major asset on different categories. On forex, I used to trade USD CAD. Indices, I used to trade Dow Jones, and commodity, gold too, and also the bonds, I take Eurobond. Okay, so let's see now on the graph what's look. So as we now we have like as the customary, we know that the US dollar index is the mothers of all of charts, because if you like a serious trader and you want to trade different market as like gold, forex, even indices, and you don't know what's happened on the US dollar index, you will be for sure wrong all of time, right? Because dollar is pretty much inverted correlated with all of the others pair or the others currency or others products. Okay, so as the dollar, we cannot talk about the dollar without to mention that dollar is politically and also geopolitically and fundamentally impacting the market, right? We have the recent comments of the American President Mr. Donald Trump is doing a comments on the operational and functioning of the Fed, and is just like putting doubt the transparency and also the credibility of this institution. But he don't care, right? Because his definite ultimate goal of the president, American president Mr. Donald Trump, is to keep the dollar low as much as possible from his presidency, from his comment, tweet, and declaration. And again, yesterday, the last Sunday, he said to the president Hassan Rouhani to do not again threaten the United States, or they will have regret all the life. And the president, because the president of Iran, Rouhani Hassan, said doing war with Iran is the mother of the war of other country, and he tend to pushing hostile policy on the world trade against the United States, because United States put embargo on Iran and also others partnership which is related to do trade with Iran, right? So there's a comment, those comments and those things as concerned that the president doing so much time, and that's why I did a video to make sure that the others retail trader which is follow us through this program to not concentrating in what Donald Trump said, right? Because we know that this guy is not stable mentally. He's just he's very compulsive and emotionally very fluctuable. The only thing that you have to do as a retail trader is to focus on what's the market interpreting from comments and tweets and other things, because the market is binary, right? If nothing, if we do not say nothing on the financial market, if there's nothing comment, the market interpreting as is a good things, right? And if you said bad things and bad comment, then the financial market could interpret it as a threat or possible threat, right? So that's why you not have to worry about any comment or any tweets of Donald Trump. Just focus on what the market interpreting, and then you can follow the movement and the flow which is related for that. Okay, so as we see here on the graph, technically on the US dollar index from FXCM, we see clearly that we have some of the hardest technical pattern to trade, which is the descending and widening wedge, right? Which is very extremely difficult for trading that, right? It's not a channel, it's not just a simple wedge, is a widening wedge, descending widening wedge, right? So as we see here, we potentially doing some of larva double bottom, and we did not clearly break the neckline over here, right? If I will show you that, so let me illustrating my thinking. There you go. So we did not clearly break this. I will take out all of those because it's not relevant. So as you see here, technically we did not break that and close above this neckline. We just hinted, we just going above that, but we not close above this neckline. So as I talk as much as many videos, my previous video, I said as much as we stay through below this neckline, we not consider that the dollar is bullish, and it's technically proved front of you. I cannot like show you other things that I'm not seeing, right? So if you see here clearly, if I zoom big on the screen, look at that. It's clearly like below this neckline. We're not close above that, because if we break that, for sure we can see that the dollar will enter in the very, like, on the long term, mid-term and long term, it can pursue is long movement. So that's why I do some program before where I call the decryption of a speech fed, right? Where I said that be bullish in short term on dollar until the 29th September, and after be bearish, right? That's because I just want to talk about this previous movement that we got here, because we know that officially the Fed enter in the tightening policy in the financial markets, and we felt that on the others currency pair. And some of trader has show kind of very interesting pattern on the Twitter, which is I forgot his name, but essentially he showed that kind of possible head and shoulders inverted, right? And I will show you how he described. So you see here, and a possible shoulder. This is the head, right? Correct. And you see again a retractment here, over here, and then we coming to retest this previous level, which is the 11,800. And after we probably look to break this neckline here, right? So we have we can have like this possible movement to for coming. It's very like touchy technical analysis, because it wasn't evident to see this clearly inverse head and shoulder materialize. And we can for sure break this like this neckline. And if you break it, because the most of time and technically a pattern for head and shoulder inverted, it's supposed to going up, right? The potential to going up is, I think, 75%, right? But if we didn't breaking this line here, then that would be the sellers of the on the dollar will just like reinforce, and they will come back, and then we can like definitely short dollar, buy a gold, buy oil, buy euro dollar, and you know it will be like this kind of scenario. So that's why I told you as much as possible from the previous program that I do for you. Don't be bullish like easily on the dollar, because fundamentally it's not looks to be bullish with President Trump and all the concern, and also the context for trade war as we got now. And technically we clearly see on the screen that this potential head and shoulder inverted could probably materialize if we did not break this neckline here, right? So I will take out those lines, because I'm assuming that you see clearly what I want to illustrating for on this screen. And we will report our traditional Ishimoku indicators, so which is here. There you go. So as we see here clearly, we still on the red cloud, right? And we know that when you have a red cloud here, that means Ishimoku is still bearish. But I know that we like little, like we pass over the cloud, but it's very slightly, right? But as much, again, I will tell you the filter of this curve of the lagging span curve, which is the filter of Ishimoku. If it didn't cross if it didn't cross clearly the clouds, and also the curve as we have here as a Tenkan and Kijun, we cannot talk about like bullish on dollar, right? So technically we see clearly that at the horizon the dollar doesn't like is not it doesn't see clearly that it's bullish. Probably in the short term, very short term, some people could like make some strategy on to buy dollar, but as a mid-term and long term it doesn't look good, right? So let's now go into the USD CAD, and USD CAD again show you like a very nice opportunity to short this market, and that's why I also made a video to respond to my friend what I'm sharing about what I'm thinking about the USD CAD, and I didn't change my mind. If you follow me for a long time, I'm still bearish on USD CAD, and I didn't go wrong with that because I short first time here on this level, and the some previous broadcast I told you guys to short USD CAD at $34, $33.50 to $34, right? And people were doing that, they make like minimum 200 pips or 300 pips, right? So I short it again here. I take my I just cut my profit somewhere here in intraday, because when I put it I secure my position, we got a long doji here. This doji killed me, right? This doji. So I put my I short in here, and I secure my position over here, and we got the long doji, and it is break me out on the market for sure. It's I didn't take all my take profit, but I'm not losing that trade. I cut my position around like 100 I think 180 pips that I got, right? And again, if you see also like a deep play, we probably see some of double top, right? We going with like an impulsive like bullish candle, which is Arami. Arami is a kind of candle which we don't have like the wicks. It's just like a strong body. It could be blue or green, depends of the configuration that you put, but we got here like a strong bullish pattern without wicks, and it's like it fell about in this red zone here. So the market going up, break it here, reintegrate the zone, so doing kind of double, just like one top here, and then we going back, we do it again, another top here. So I put this like a rectangle, this orange rectangle here, to show you the critical zone that you have to follow. And if you reintegrated this zone over here and you break it, let me tell you that the market will probably goes to touch the POC, point of control, which is $27. So if we break it, if you reintegrate and break it, like the $30.74.40, okay, $30.740 over here, if we break it this level here, we probably look that to touch the $27.500, okay. So it's kind of free 300 again movement that you can take for free, right? So be very careful with that. For sure, my strategy is to short USD CAD because US dollar, as we saw previously, doesn't look good. So that's why I'm just waiting the time that and the signal. For sure I will let you know about that. For people which is follow me, it will be very nice trade to take an advantage for that. But don't anticipate it, okay? Don't trade here, because like this, when I put some like this rectangle over here is a kind of trap zone. So that's why I'm just stay out this market for now. I'm just look at it, and when the opportunities we will show to my screen, for sure we'll let you know. Those people we didn't like doing some long-term analysis will be for sure wrong, because in intraday, if I put in 5 minutes, some people we would like to trade in this zone, this area, and look at how the market like progress. we cannot trade those kind of pattern. It's completely messed up, you know. Look, there's like any concrete direction. It's a kind of range, right? So that's why I did this previously. And again, look at the historical of this movement. It's pretty much the same. It will be repeat again, right? Look at it, you know. So this zone is definitely a trap zone. Don't trade in trap zone, okay? That's why I put some like beautiful orange rectangle that we have to stay out the market and just waiting that the market comes to you and to show you like the nice opportunity that you have to trade. So very careful with that. I'm assuming that you understand my vision for USD. So I will pass on the US 30, which is the Dow Jones, the CFD of Dow Jones, and again it's the same. It's the same always the same vision as we talk like as much. Definitely, as I said, the US dollar is completely linked with others major currency as well, and also indices. And if you know that the spectrum of bearish spillovers on the dollar, for sure the US 30 on the index will be probably, we got like a last rally on the index. And we see technically, if I hide a bit of Ishimoku, you see clearly that we break this descending channel, right? We break it, this descending channel, and this zone here is a test on the 25,290 to 25,500. If you break it, we could have like a massive movement to probably reach the 27,000 level, and after that we probably see the wave as we the count wave, as we every specialist of like the Elliott wave cycle, that today we're expecting the five time wave. Probably it will be like a draw to technically, for sure, technically it will draw probably until the 26,500 to 27, right, on like the next highest. But if you don't, if the fundamental and the geopolitical doing insisting on the market, and it's impacting all the major assets that we study, probably it can like also erase the it can erase the perspective or technical analysis that we expected. And then we can have also, it could reinforce if we're reintegrating the descending channel here, right? Because when you draw kind of bullish pattern, and if the bullish pattern didn't realizing, that means the sellers has took the market, has taken the market. So they will reinforce the strong to sell this market. That's why. So if you fail to pushing a bullish movement, is a kind of signal for bearish market. That's why. So very careful with Dow Jones, and intraday you can scalping that for sure, but on the long term, don't missing out this opportunity, because we see clearly that of the all around the in the long term, we see that we above the cloud, and it's green and it's wide open. So Ishimoku said that the in long term the index is still like bullish, but bullish at when? Bullish probably until if we break this red zone here, because we see clearly that we fell 3 times, 1 time here, 2 times here, and 3 times here, right, consecutively. So that's why I want you, if just waiting that the market could probably going until here, and you see clearly that the curve of the filter on Ishimoku, the lagging span curve, didn't cross again completely this chart, right, because it's a projected 26 period behind it, right? So that's why we just looking that and waiting if the market goes to test this level, and if we break it, for sure we buy with, if you want, with leverage effect 4 or 5, you know. But as much as we stuck here, don't trade, just waiting, and the market will show you clearly the possible movement that he is supposed to do. Okay, so let's go into gold. Again, it's, I will hide the this indicator, and if we see, we have clearly some of ascending triangle with like a support zone in oblique, and support like ascending oblique and support, and we have an horizontal resistance, right? So it's a ascending triangle, which is a bullish movement, right, in the long term for sure. But as we see clearly right now, because the dollar was like very strengthened through the previous period, it put pressure on the dollar. But as is with eventually comments of Donald Trump against Iran, which is have a nuclear like weapon, so it could like also put some like a jeopardy on the financial market, and it could accelerating probably if the gold doing is stop. Mine personally, I don't want to trade gold as now. I'm just waiting that the gold will coming to test again this green support here, oblique support here at the 1000 I think it's 1210, right? So 1210. If you come to test this line here, then I will looking to buy for the long term the gold, right? But as now, I'm just taking the market. I'm just looking at the gold doing everything he's want, and I don't want to trade. And I don't recommend people if you trade CFD on gold. I don't recommend you to trade intraday of CFD of gold. Just if you trade for on future market, for sure you can doing that. But if you trade on CFD like me, I would definitely recommend you to study the long term and to look at long-term position, because it's very complicated to trade gold and intraday, because any comment and any tweets could destroy your capital for sure. So very careful with this pair, and look the movement. It's not like we cannot trade like this, right? And this is 5 minutes, right? So again, just let the market goes to like collapse until this zone, and then you can buy it, right? I just buying the gold only if we coming here only. Otherwise, I'm just stay out the market and just look at it. Okay, is all that I can say to you on the gold, right? So let's finish this program with the euro bond. So euro bond is again is not doing like clearly something, is just like stuck in the previous level, and we definitely know for sure that the presidency of Mario Draghi for ECB is has been almost done, and we know that he won't like increase the interest rate before that he will leave the his presidency, because the person which is supposed to replace him is supposed to a guy with love like a tightening policy. Draghi was kind of like a dovish man, but the next person, which is, we don't know who is, but they said that the next person which is replaced possibly Mario Draghi is supposed to be a bullish guy on the euro dollar. So that's why right now we don't have a clear vision on the ECB policy. But again, we know that the purchase asset program could not like erase one shot, right? It will take time, and also they reserve also the right to intervene in the market, as they said that the policy of the QQE, the ultra massive liquidity into the market, and the quantity also on the money, they said that it could like the duration could be longer until the next summer, right? The next summer at the 2019. So that's why my vision to the midterm and long term and the Eurobond has been still the same, right? It will be for sure bullish. But as now I'm just stay out the market. It didn't give us some like a clear vision to trade. Look at it, like the trajectory of the market is going nowhere, you know. So it could probably also with this Schumer, because Eurobond is essentially is a product of big trader. If they get off the market, they go to the like vacancy, and nobody trade that like as much. We don't have the same like volume and quantity of liquidity on the market, so that's why we could have like messed up progression, right? So I didn't say anything for that. I'm just stay out the market, and I will for sure get back to you if there's something interesting me, or if there's something which is looks some like great opportunity for sure, if you used to follow me. So let's see now the recap for this program. So as I said, the weekly market technical analysis summary. USD CAD is technical. I stay neutral for now. Long term is neutral to bearish for sure. Dow Jones technical short term is neutral to bullish, and on the long term is technical to neutral, right? Because when I say neutral, that means it could go up or going down, or also stay on flat. So that's why I said that. So be very aware on that. Gold on the commodity is technical. We see that clearly short term is bearish, but it could definitely make a neutral, because a market didn't pass to bullish to bearish, or bearish to bullish. There is some like a transition step before to going up or to going down. That's why I said bearish to neutral first, and then after neutral to bullish, right? So Eurobond, to finish that, technical short term is neutral to bullish, and technical long term is again neutral again to bullish, because we know fundamentally they're not ready clearly to stop to put like liquidity on the financial markets. So that's why the debt will not like finish like one shot, as I said before. After that, you have also the previous level and the key levels to watch on USD CAD as in front of you, and Dow Jones, it's just my level that I follow you essentially. And if you want, you can also draw this level at your chart, then you can keep in touch and very focused on that. Okay, so that's all that I want to talk to you for today. I'm very happy again to present this program. If you like it, for sure, please let us know that. Put some massive thumb up, share to your friend. Is the only way that we know that you guys love this program that you make. And also, if you're interested to know how to trade stock, to learn financial market, to be framed, I also kindly recommend you to come into us, and we will for sure a pleasure to help you. Don't forget also to put some reviews to a comment to the reviews section on Facebook, and also let a comment. And also I will see you around, and thank you so much for watching this video. It was François from JST Canada. It's 9 a.m. sorry. Goodbye.